Moving on to other updates that we are tracking, the Indian equity markets have navigated a volatile January 2026. The Nifty 50 and Sensex slumped nearly 4% in the first half of the month, but recovered some of those losses following the announcement of the India-EU Free Trade Pact. The downtrend is fueled by relentless foreign portfolio investor selling. Overseas funds offloaded a net around $4 billion in January. However, domestic institutional investors provided a sturdy floor by absorbing some of that selling pressure. Now, with the union budget set for the 1st of February, the market's focus has shifted to stimulus.
Yeah, see, what are foreign investors looking for? They want a continuity of a policy regime, not a rejigging of tax rates on a yearly basis. So that is one. Secondly, they want a competitive tax regime. So in line with what they are paying in other jurisdictions. Third, they are looking for growth, which we are providing. We have rule of law, protection of property, and growth. But what we are lacking, one is our valuations are too high. So earnings have to justify those valuations. Second, artificial intelligence is what has been seeing most of the incremental flows. And we don't have anything as a pure play artificial intelligence or semiconductors play to attract foreign investors. These are the two big issues.
And markets are looking at possible tax rationalization that could reward investors to stay anchored in India. Analysts are also expecting a fiscal deficit target of 4.3 to 4.4%, as it could balance growth and stability. One of the key areas for investors is the government's divestment target. Any commentary or clarity on the government's stake sale in firms like Shipping Corporation of India and Hindustan Zinc could provide the government additional revenue without having to borrow. And as the countdown to the budget enters its final lap, markets are expected to get increasingly volatile. But whether markets enter a bull run in 2026 or not depends heavily on the government's narrative around these key terms.
There is a lot of hope that the budget will bring in some measures which will help the markets. But we must realize that right now, there is no political capital as such to be spent. So overall, there is no imminent national election. We are not expecting big bang kind of reforms in the budget. So it could be a non-event, and we will have to wait for an earnings recovery in the Indian markets. That might be the issue, and the budget could turn out to be a non-event.